What's up, everybody? It's Ryan here, and today we're going to talk about the real estate crash of 2021. So will there be a real estate crash in 2021? I can tell you that I've lived through a crash in 2008. I claimed bankruptcy. I lost my job. I lost all my money. I lost my houses that I invested in. Made a lot of bad choices, and it was really bad. Actually, I was a personal trainer, actually a fitness manager at 24 Hour Fitness in Concord, California. And then what happened was I lost that job, couldn't hit my targets, and went to become a personal trainer at UFC gym in the same place in Concord. And it was a struggle, right? During that time, I can tell you what happened was, 2009, 2010, 2011, the market was in a really crappy place. And I was struggling financially, but I already knew from all the books that I've read and all the things that I've learned that anyone who bought a house during this time was going to make a killing. Everything was so cheap, right? So if you bought bundles of houses in 2008, 2009, basically the bottom of the market, you made a killing. And what's interesting too is like a lot of the YouTubers that I watch are a lot younger than me, about 10 years, or 7 to 10 years younger than me. They bought houses around that time, right? Because I'm 38 now. Maybe some people that I've watched on YouTube, financial YouTubers, they were getting their career started around that time, and they invested in real estate in 2010, 2013, 2012. Perfect timing. So it's interesting how anyone who bought a house during the early 2010s made a lot of money on their real estate. But let's talk about if there will be a crash in 2021. Before we even get into that, we have to really think about what caused the crash in 2008. And how is the crash in 2008 same or different than what may happen in 2021 or even 2022? Well, 2008 was a really special time because speculation was crazy. Speculation was crazy because people were betting on buying houses. I was one of those dumb people that did that. And what happened was you could get a mortgage if you had a pulse, right? You basically didn't have to show proof of income. So lots of people were doing that. A lot of people bought a house they couldn't afford. They were speculating on the price going up. And it was for lots of people, especially if you bought in 2004, 2005, and 2006. And then what ended up happening was, people couldn't afford it anymore because the interest rates went too high. There's adjustable rate mortgages. If you don't know what that is, it means that your mortgage changes every month, sometimes every month, but every year. And what happened was that a lot of people couldn't afford these homes anymore. So first of all, the first step is that a lot of people bought a house they couldn't afford. I own like over $1 million of real estate, and I made like $60K a year. It's pretty crazy that I was allowed to do that. Also stupid of me to do that. And then those houses went to foreclosure because they couldn't afford to pay the mortgages on them, or they didn't have renters to pay. And then what happened next was they go into the market, right? Then other people are selling their homes. So what's that do? That causes an increase in inventory. When there is a higher supply of inventory of any product, in this case houses, prices go down. That way they meet the demand. So it's really an inventory issue, a flood of inventory because of foreclosures and people selling their homes. In 2021, is something like that going to happen again? That's the question. Are a bunch of people going to dump their houses and go into foreclosure? I think one of the biggest concerns is that a lot of people will go into foreclosure because of the pandemic and because of people are struggling right now because of just people losing their jobs or not making ends meet. I think that the issue though is that it's just not the same thing because the amount of inventory that can actually flood the market isn't going to be nearly as high. There's less speculation over the last decade, right? There's just not a lot of people who bought a bunch of houses they couldn't afford. Actually, they made lending practices so difficult that it would be pretty hard for that to even happen, right? Because you had a double whammy that happened with 2008. You had a situation where a lot of speculators had houses that they dumped, right? On top of the fact of people who did have houses that they sold. So you had, a larger amount of houses hitting the market, whereas in the future, in 2021, that's not likely to happen because there just isn't the same amount of houses that are going to potentially hit the market or go into foreclosure. Another thing to consider too is that the Federal Reserve have committed to having interest rates go above 2%. Or are okay with interest rates going higher than usual. And that simply means that interest rates will stay low. Interest rates are already pretty much zero for getting a very low mortgage. You'll get imagine $1 million home. If you have good credit, a mortgage payment is $2,500 a month. So you can buy $2 million home for like $5K a month, right? If you have really good credit, or maybe $6K a month if your credit is moderately okay. So what's that mean? And why am I saying that? Well, people who do have money, people who have been doing well financially, people who have vested in real estate and have a lot of cash are going to come in and swoop in and buy that real estate. And why would they do that? Because inflation is going up, the dollar is going down in value, and it's essentially getting watered down because of all the money printing. Obviously, there's a lot more to it, and there's a lot more that I'll be fair to say that I don't quite understand. But one thing I can tell you right now is that cash is becoming worth less. That's the reason why Bitcoin is going up. That's the reason why real estate prices are going up. And that's one of the biggest reasons why the stock market is going up, is that the price of the dollar, the value of dollar is going down. So if the value of the dollar is going down, why would you want to hold on to that? So that's kind of why people are buying stocks, they're buying real estate. So even if there is a dip in 2021, which I really believe there probably will be, what's going to happen is the people with the money are gonna buy, and that's going to be the reason why there won't be a crash. I also think the other issue too is that what's going to happen is the government will come in and they're gonna allow more loan forbearance. They're gonna allow people to stay in their homes. When I lost my house, and I almost lost my house in 2008, foreclosure, actually 2009, I went through loan modifications. It was really scary, and because we couldn't afford it, because I wasn't making the same amount of money. And it's sort of what's happening now with some people, but it's a lot different because we have the experience as a country going through that. So we'll be faster getting ahead of it. So that's why, stimulus checks are being cut, and they'll allow people to stay in their homes, and they'll give people breaks because they don't want a crash like that to ever happen again. And I think that, part of me or a lot of people out there that have money on the sidelines, they want to invest. They're likely not, they want to crash, to be fair. Like they just want to crash because then they can buy everything that's on sale. But I think there's just enough people out there that are willing to buy as the price goes down. It's just going to meet demand because inventory is low. But that's just my opinion. So waiting for a crash, I think is kind of silly, it's just unlikely to happen. I do think prices will dip. But see, the problem is with the prices dipping is that the percentages, the interest rates are super low right now. So one of the reasons why the interest rates will dip is because they're going to increase interest rates. And if that happens, that's just going to make it so that we're in the same exact place. The amount of house you can afford with a higher interest rate, you just afford less of a house. So there's a lot of factors in play. Trying to bet that the market will crash is just unlikely. So what am I doing with my real estate investments? I don't know about you, but I'm planning to buy a house in 2021. And in lots of ways that can mean that sounds like I'm just confirming my own beliefs that the market won't crash. But the truth of the matter is I'm not buying a starter home. I'm buying a house to stay in for the next 10 plus years, and raise my children, raise our kids in, and stay in for quite a while. We are actually moving to Vegas in December, and this month, and we have a house down there, which was a rental, and we're going to stay in there for a year while we look for another house, and then we're going to rent that house out after we find another house. We have another house in California, which we are pretty much going to keep forever. We're essentially just going to pick up rental property and invest. We're not trying to flip real estate. We're not trying to make a quick buck. We're here for the long-term investments. Now, as far as buying investment real estate in 2021 and in the future, I think for me, a lot of it is just really finding the right deal, doing your numbers. At the end of the day, you have to know what you're doing. Like I think that's a hard thing to realize when it comes to any endeavor, whether it be running a retail store, a restaurant, an online business, a coaching program, a YouTube channel, right? You have to understand your market. So if you're buying real estate, you just have to understand what you're paying for, what the analysis is, what your cash flow analysis is going to be, what the potential is. At the end of the day, it's all risk management. So should you buy a house in 2021? That's the question. Should you buy a house? Should you invest? That's the thing. That's just like I said, you have to do the analysis. Is it a good deal? What's your plan? Since there's a potential for a crash or a potential for some dip in the next year or two, should I buy a house next year? Well, if I'm going to stay in it for a long time, it doesn't really matter. But if your plan is to have a starter home and you wanted to turn it into a rental and do some house hacking with it all, well, I don't know if you necessarily should, because it depends on your situation. For example, if you have no money, right, and you have no money for down payment, or you just barely any money, you're saving money, probably the best thing to do is just really try to find a really good deal. Maybe partner with somebody, you get a house below market value. The common strategy that I hear a lot from a lot of the real estate and investor YouTube channels say that the BRRRR method. You buy, you rehab, and then you rent, right? Because in that way you get an after repair value. You get something that's below market because it's just not in good condition, and then you come in, you invest some money in, and then you rebuild it, you fix it up, and now it becomes worth more, and then your money goes up. So that's, as long as your numbers work out fine, you should buy a house. But if you're just buying a house to live in, you want to stay in for 10 years, I don't think it really matters. However, if you want to buy a house that you want to like just stay in for 2 or 3 years and then sell, and then maybe like just rent, honestly, I don't know. Let me think about this. Like if I were just to think this out for myself, like if I were just starting out and I had barely any money, or maybe my career was taking off, I was putting some money in cash and I want to invest, would I buy a house next year? It would have to be a really good deal. I really think it might be, but the truth is I think it might be unlikely that I would buy a house, because I would want to buy a house at such a good deal. But then again, if I was just starting out and I really wanted to focus on real estate, I would be looking at more deals. This is, real estate investing isn't my primary business, so I'm not going to be looking at a lot of deals. So my use for real estate is really for use. It's actually for usage, not for investment. Anyways, those are my thoughts on if there's going to be a crash. And these are just my opinion. I'm really curious to know what you think. Are you planning to buy a house? Do you think there's going to be a crash? I would like to hear your comments and below. I think a lot of people are scared, right, with the pandemic. I think a lot of people get worried about what's for the future because of just how much the world has changed in the last 12 months because of it. However, I think the thing here's the mental model that's going through in my head, right? We have a couple things. We have the Federal Reserve, we have the government that has been through a crash that essentially seems as though that they are willing to do whatever it takes to prevent another crash from happening, right? You also have a lot of people who have made a lot of money and they have cash on the sidelines, and they are willing to invest that money when the price is right. And if you have enough people on the sidelines to invest that money when the price is right, the crash just is unlikely to happen. Right? Because what happens is when the stock market begins to drop, or when the real estate market begins to drop, there's going to be buyers there. There's going to be demand that comes there. Because a lot of it caused a crash in 2008. It's a perfect storm, but like the nuts and bolts of how most of this stuff works is inventory. Think about Target. Think about any retailer. They usually have like a discount aisle, like things on clearance. If you ever go to the end of each of these racks, or even at the grocery store where they have like the meat that's like a little old and it's on discount, right? Because the inventory was too high for particular products. So because no one was buying them, so what they did was they discounted them, or they had too much of them, right? And that's kind of what happens. And that's what causes the price to go up and to go down is the inventory, is the desire for people to buy houses and an amount of available choices to pick. And this especially applies more so in like the middle ranges. Like the median price, I think in Las Vegas is in the 300s. 300 or 400,000, right? That price market is, people are still happy to buy houses in that market. There's a lot of sales volume there. I think the thing that might get hit the hardest though will be the people who buy houses that in a higher price point, $1 million plus, like 4 times the median price. But the thing is, like, if you're buying a house like that, you're fine. You have enough money. I think the thing that's bad is if you over leverage yourself, that can be an issue. But yeah, that's basically all I have for this video. I wanted to share my thoughts with you. If you want to share your input, I'm really curious to hear what you think. Anyways, this is Ryan signing off. I'll see you guys later.